Gold is building bearish momentum. Silver is stalled. Oil is stalking and it's cheaper gas. Natural gas dropping. Uranium, a full spectrum signal from Quad U, URA, and CCJ. We translate the CandleSpeak, forecast Elliott Waves before the crowd even blinks. Let's dive in. And today we start with gold. So this is the closure, and let's see what candles are telling us. So first of all, I'd like to say that the candle that gold formed on Thursday, a big green one, has been cancelled, and right now we are looking at the continuation down there. And I'd like to say that this is a cross, bearish cross, 8 by 20 EMA, and this is a slightly bigger picture than what we discussed just a few days ago. This is the potential for double top, and this would be the target somewhere between 30.35 and 29.72. This is approximate one, but let's see how it develops so far. It would be 13% of the top. For the 3-day candles, which already confirmed the top on the 3 days, so the next candle will be closing in a couple of days, Monday and on Tuesday, and so far it is looking bearish. And the most important closure today was with a weekly one, and unfortunately this week this candle confirms a reversal, a big one. So now it is closing below the low of the previous red candle, and now we are looking for a chance to continue on. So I would say the next candle would be a strong confirmation on a much bigger frames. So now let's have a look at the momentum. So momentum is building, and building strongly. So far this is the 3-day frame, and MACD bearish cross of record magnitude, and right now we would be looking for the weekly one to build. So perhaps it might take another few weeks before we can see this magic to happen. So far that's bearish. Now let's have a look at Elliott Waves. This is a very interesting wave that gold formed in the last couple of days. First of all, I'd like to say the potential for moving higher. So gold potentially formed an impulse upward. If we look at the red path, this could be an impulse up. And wave 5 is the longest one. However, based on some technical indicators, I'm not convinced that this impulse was fully completed. I think that there is a chance that it made only wave 1, 2, and 3. And for wave 4, unfortunately, if we are talking about blue path, so this wave 4 went way too long and technically invalidated the impulse. So this is a question. And now if we look at the wave down that I put right here, so this is a clear impulse wave 1, 2, another clean impulse wave 3, and now we are looking at wave 4. So far this wave is not entirely impulsive, but anything can happen. And gold stopped just a few basis points, few points below this red line, which would invalidate the red impulse down. So I think it would be critical to see how it opens on Sunday. If it opens down and completes the wave down, then it would be the big and serious impulse. If it breaks here, then we would be looking for a potential red path up. So you could consider this wave 1, this is wave 2, and the wave higher. Well, that's the perspective from the short term. And now let's have a look at the slightly bigger chart. So this is what the criticality is. So now we have an impulse down, we have an impulse up, and potential impulse down. So if this impulse completes here, then this green path that we discussed just, I think yesterday, it will be invalidated. So far it's still on track, but if gold makes another lower low, and especially if it makes it to below this line here, well, the green path would definitely be invalidated, and it would open the perspective for a much bigger and more serious impulse down. And I'm talking about this potential one, two, and wave 3 would be somewhere here, and we would be then looking for an extended impulse, wave 4 and 5. Well, that's the perspective from the short term. Now, let's have a look at slightly bigger picture, as I promised during the week. So this is the latest wave that gold formed since October 2022. And now we are looking for potential either completion of this wave or it might be extended. So based on certain Fibonacci ratios and some technical elements, there is a chance that this is only wave 3. This is a chance that this was only wave 3, and I'm talking about the blue path. 1, 2, 3, 4, and wave 5 would be somewhere there. Let me put it here. So wave 5 could be somewhere up here. So that's one perspective. So if this is the case, this is a valid case right now, then we would be looking for wave 4 to land somewhere in this blue rectangle. So we know that wave 4 often finds support at the level of wave 4 of the previous lower degree, and this would be the maximum that I would accept for wave 4. So there is quite a move would be here. So if this is the case, then wave 4 could go and lose up to 25-27% of the top. Well, that's quite significant. And another perspective, this is a red count. 1, 2, 3, 4, wave 5 here, and bigger wave 1 and wave 2. So in this case, I would be looking for a bigger correction, something like this, and this would be for the red path. And in this case, I would be looking for the red rectangle as a target. So gold usually retraces 38 to 62% of the previous impulse, and in our case, it would be somewhere between 20% and 33-34%. Well, that's the perspective for now. Let's see. So far, we know that the weekly already bearish, and this is a bigger concern. And now for another data point, let's have a look at the GLD trust. So what happened today? A green candle. Technically, one might look at it as a bullish one. However, I'd like to say this is most likely an in a neck pattern, which is viewed as a bearish continuation, and this cross is likely to stay. And the most important closure obviously happened on the weekly frame, and this is the one that I've been discussing for a while, saying that the closure below this line 294.53 would be bearish and would be strongly bearish. So we can see that GLD closed at 294.24, so just 30 basis points below. And well, it formed a top on the weekly frame. Now the path downward is open. So that's what I wanted to say about gold. Just a quick checkpoint before we move to silver. If this gold breakdown has helped clarify the direction or risks, let me know by tapping the like button. It's a small signal, but it helps more than you think. Now back to the charts, and we talk about silver. Silver is not as decisive as gold. We discussed it already, so silver most likely is for another long consolidation phase, and so far the candles are neutral bearish. So this is not confirmed, but anyway, it's a bearish tilt on a daily frame. We have a somewhat neutral bearish candle on the 2-day frame and the freshly made EMA 8x20 EMA bearish cross. And on the weekly frame, it is still undecided. The first weekly candle was here and it was bearish engulfing. Now we see that silver tried to negate it, and another attempt for a move down was not very successful. So far, odds are slightly bearish. Now, if we look at this one, this is the chart that we've been tracking with our members for a while. So this is the perspective for a MACD bearish cross on the 15-day frame. And what we can see here is that it is slowly curling down. And for this is a very large frame, 3 weeks for each candle, and the next candle is closing on June 3rd. So we need to wait another almost 3 weeks for anything to happen here. And I'd like to say that this is the statistical perspective. If we see the cross happening, we might be looking for silver to go down there, and it would be a loss about of 40%, 30 to 40% of the most recent top. And I'd like to say that it's not gonna happen overnight. So the previous decline, the previous bear market lasted 450 days. So maybe the somewhat similar is going to happen next. But just be aware, be prepared. So silver, it doesn't look bullish at the moment. Now let's have a look at the Elliott Wave chart. This is chart we've been discussing for a while. Just a short term. We will be talking about the long term and midterm charts in our weekly report with the members, with subscribers to investingangles.com. And at this point, I'm seeing quite a few different paths potentially can develop here. My take right now is the blue one as a primary, so it would allow silver to consolidate more for several weeks or maybe even several months until we see another strong move down. However, this the purple path also could develop. However, it's not that at this point it's not very convincing. So that's the perspective from Elliott Waves. And now the final chart for silver is SLV Trust. So what happened today? Silver tried to negate, to reverse the odds here. However, it wasn't very fortunate. I would say that this is mostly a consolidation candle. And if we look at the bigger frames, for example, like a 3-day frame, it closed with a clear confirmation. We have a bearish candle and a most likely a harami, and now a confirmation of reversal. So the chances for a continued move lower are slightly higher. And the weekly frame remains bearish until silver makes it to 3102.02. Well, that's the candle today was also slightly bearish. However, it wasn't very decisive. So I would expect maybe another few weeks of consolidation before the next move down. Now let's move on to the next section of our discussion today. And before we start, I'd like to ask, if you subscribe but not getting alerts, it's because you haven't hit the bell. YouTube won't remind you unless you ask. Click the bell so you never miss a critical market turn. Now let's talk about GDX. GDX was pretty much the same as silver. However, I'd like to point here that it lost a big support line. This is the 50 days moving average, the blue line, and we have 3 candles below it. So it's quite different from what we saw in April when it was a quick recovery here. So now it's a build up, potentially leading to lower prices. And I would like to say that if we look at the 3-day frame, it closed today with an on-neck candle, which is viewed as a bearish continuation one. And the freshly made MACD bearish cross here, well, just supports the move down. And the candle on the weekly frame was definitely bearish. This is, by the way, somewhat similar to what GDX formed here in October 2024. We are seeing a strong move here and potential for a move lower. Now this time it will be a bigger perspective, I would say, because the Bollinger Bands are wider at this point. Now let's have a look at the chart. This is the one that I offered at the beginning of May. So far, GDX is forming another impulse down. The question is whether it's complete or not. So this is a big gap here, and it's not very clear what kind of wave it is. So we have the first impulse down, which I marked as wave 1 or A, 2 or B here, and now potentially this could be an impulse. One option would be like this. This is 1, 2, potentially this is 3, 4, and wave 5, which would fit into the blue pattern and completing the ABC formation here. But at this moment, it's not very clear. So this could be another perspective. So this wave actually could be wave 3. Now GDX is forming wave 4 and downward the wave 5 for wave 3, which has higher probability at the moment. And I'm planning to run the midterm and long-term charts in our next update, in our next weekly update. So once we have clarity around this wave and we have a bigger picture ready. So that's about GDX. Now let's move on to the next subject, natural gas. And a quick reminder, so we offer a full written analytics package through our ultimate subscription. Every setup, every wave chart, every big picture signal that we track. If you are interested, just email us at help@investingangles.com, tell us your country, and we might be able to tailor a special discount for you. Well, now let's move on to natural gas, and let's see what candles are telling us. So closure today was practically bearish, and I think it was significantly bearish. We have a daily closure, we have a 3-day candle after a very strong, but the candle is not closed yet, but so far it is looking bearish. And the bigger concern is the weekly closure, a strong bearish engulfing here. So the chances of a continued move down are significant. However, I would like to say that it's not very strong from technical perspective. Technical support is rather weak right now. And if you look at the Elliott Wave chart, this is what we've been tracking for a while with our members. Potentially an impulsive wave up and an ABC correction for wave 2. This has been on track for a while, and I think that natural gas is approaching its reversal point, maybe slightly lower. The next week will tell us the story, the beginning of the week. So far, natural gas is bearish until reversed. Now let's talk about the next one, and the next one is oil. Just a friendly reminder, so if you're subscribed, this is great, but unless you tap the bell, YouTube won't show you new videos. If you want to stay ahead of the markets, hit that bell. It makes a huge difference. Now oil. So yesterday oil confirmed a top on the daily frame, practically. Now it is trying to negate it, and it formed a bullish Harami candle. So if this candle is confirmed on Monday, Tuesday, we might see a rally for oil. However, the odds are not very well supporting this move so far. And if we look at the daily frame, the two-day frame, today closed with a strong dark cloud cover, which is a hanging man at the same time. And I'd like to say maybe if you can see another attempt on Monday to move higher, that the chances for a closure on Tuesday down there would be stronger for bearish closure on Tuesday. And the weekly frame had a chance to form a bottom, but it failed. It was pushed down below the support, below the resistance line. And now I'm seeing, even if we have another attempt to move higher, the odds are bearish here. So that's the weekly, that's the candle perspective. Now let's talk about Elliott Waves. So Elliott Waves is again the same situation that we have for gold. It's not clear. So we potentially have an impulse up and we potentially have an impulse down. And the impulse down is not complete yet. And we might need to see a formation like this. So another lower low. And this would be for the red path. So if oil makes another lower low, opens down and makes it, and I would be looking for an impulse down. And if it moves higher, it might invalidate the impulse, and we would be looking for completion of wave C with another wave. This could be wave 1, 2, 3, 4, and 5. So that would be 1, 2, 3, 4, and 5. So both these counts are on the table right now, and none of them has been invalidated. So a slight move up will invalidate the red one. A slight move down below this red line would invalidate the blue one and will open a red path to much lower prices. So that's the perspective from Elliott Waves, and we are watching it very closely. Now, just a historical perspective for those who are watching us for the first time and not sure about the predictive power of candles. So this chart we've shared with our subscribers on August 21st, 2022. And we said that after these 3 black crowds on the monthly frame, oil has a very good prospect of moving lower. And so far, you can see that it is moving lower. It's been almost 3 years, by the way. And it managed to lose about a third of its value over this period of time. Obviously, this line wasn't straightforward. It was up and down, but nevertheless, the long-term perspective was clear, and we are yet to see a reversal pattern on this frame. Another chart that we are tracking right now was a big call, technical call on January 18th. This is the Brent chart, a weekly Brent chart. So we mentioned here that Brent made a big top, and it was technically aligned with the one that Brent formed in 2020, if you remember how it ended. And so far, it's been tracking down. It's already been down 20+%. And that would be an interesting weekly closure on Sunday to see how Brent forms, which kind of candle it forms, whether it's going to be a bottom here or we would be looking for an extension. And the final chart of the oil section is the powerful energy trio: ExxonMobil, Chevron, and ConocoPhillips. These 3 closed the week with bearish candles, practically as expected, as I discussed yesterday. So this is bearish continuation. Most likely is going to be a reversal here. This is bearish continuation and another perspective for reversal for Conoco. And I would like to point these 2 small crosses. So this is 50 by 200 weeks moving average bearish cross looming. I think it's gonna happen next week. The same for the ConocoPhillips company. So if this happens, it's gonna be called a death cross, and we would be looking for lower prices in the foreseeable future. All right, so that's all for oil, and now let's talk about uranium, the final chapter. And for those who want more than just a video, our ultimate subscription includes full written access to market setups with charts and high-level strategy across all major instruments. If you are serious about timing and signals, this is where to go. This is where to go. This is URA candle closure of today. First of all, I'd like to say that this is a bearish engulfing and fairly strong. I think that global uranium ETF is going to pull back at least for a couple of days. On the weekly frame, after a very strong 3 white soldiers, it formed a very dangerous doji. So it could be just a topping candle. You can barely see it probably. So this is, let me remove. Yes, so you can see it better now. So this is a very tiny doji. It could be a spinning top or it could be a continuation one, depending on the next closure. Considering the previous signal of 3 white soldiers, I would say that this most likely be a consolidation. And we have a stronger, even stronger signal on the 8-day frame, which is still ongoing. So this candle will be closing only next week. Let's see what happens. So far, I'm expecting a little pullback here. Speaking about the chart, this is the 2-hour chart for URA. Wave 1, most likely a leading diagonal. Wave 2, wave 3, 4, and 5. I'm expecting this impulse to continue. However, if this wave builds into something bigger and we will be looking for the candles to guide us, we might consider this wave as this top as a terminus point for wave 1 of a larger degree, and this would be wave 2, and we'll be looking for something like this, for example. But at this point, the wave is very young, and we need it to mature so that we can see a stronger and more probable setup. So that's the perspective so far. Now let's move on to the next chart, and this is the bigger perspective. This is what we've been tracking for a while, and I'd like to say that after our forecast in December 2023, we had this wave C finally completing. There is a big chance for it to complete, and now we are looking for an impulse up 1, 2, 3, 4, 5 for wave 3. This is a very optimistic scenario, but based on the candles that we are seeing so far, it's very viable. Now let's have a look at Quad U or energy fuels. At this point, I'd like to say that there is a very good chance that this is a terminus candle here, and we might see a bounce because the 3-day frame failed to confirm a reversal, and the weekly frame also failed to confirm a reversal. So I would expect, I would be looking for the next reversal candle here, maybe in the day or two. So this is the chart. The momentum here is rather weak, and we might see a continued move, but it would be very limited. And speaking about Elliott waves, this is the chart we've been tracking since April. No questions here, and impulsive wave up, and potentially a larger wave 2, which is getting closer to its target point. So once we see it and hitting target, and especially if we see a strong candle reversal, then we will be looking for wave 3 somewhere up here. But we would be measuring only after we see a bottoming formation. And the final discussion of today's uranium is CCJ, or Chemical Corporation. So up until the last minute of the today's trade, this was a very bearish candle. However, right now it doesn't look as bearish as it was at the beginning of the day. I would say that's probably a consolidation, but we need to see now a reversal in either upward or downward. So this is neutral. The daily candle is neutral, and the 5-day candle formed a very strong 3 white soldiers, and on the 15-day frame we have a tower bottom, but we would need to wait for another 18 days until we see something, the next candle. And so far, if this initial momentum holds, then the monthly frame would confirm a reversal. So far, this is a very prospective candle if it holds for another 13 days. And for CCJ, we have slightly different perspectives. So I am still keeping 2 different paths here. First of all, first is a very bearish one, and I'm considering this wave that ended at the beginning of April as only wave A of a bigger correction, and wave C would be somewhere here. And this is the worst case scenario, bearish one, if the candles don't align. But also the perspective of a larger recovery here and a larger impulse. So this is slightly more probable right now. The red path, 1, 2, 3, 4, 5, and wave 1. After wave 1, we would be looking for a consolidation for wave 2 and wave 3 towards much higher prices. So that's the perspective for CCJ at this moment. Now let's wrap it up. Markets might look calm, but the signals are loud. Gold is picking up bearish speed. Silver still undecided, but don't blink. GDX closed green but dropped. Classic candle trickery. Natural gas, more pain likely, unless bulls step in fast. Oil's message is clear. You might like your next gas bill. Uranium gave us the full candle symphony. Quad U, URA, and CCJ all spoke loud and clear. Want the setups, wave maps, and long-term signals? Head to investingangles.com and check out our ultimate package. Our master traders Kyle and David are lighting up in the swing room and on Discord. Sharp entries, disciplined exits, no fluff. Subscribe and smash the bell so you never miss a reversal. Like this video, share it on X, Discord, Reddit, Telegram, Facebook, whenever smart traders gather. If you found the value, support the channel with a super thanks. It helps more than you think. At Investing Angles, we don't follow markets, we forecast them before the crowd even blinks. See you in the next one.